In this video, we will discuss the double entry system. You might have heard about this double entry system. This is a very important and basic concept in accounting. Here we write the same value on the debit side and the credit side, but we do it interchangeably in two accounts. Now you might be wondering what is the debit side and the credit side. Don't worry, in the next slide you can understand what it is. Here you can see an account. This is a ledger account. We use this type of account to record transactions. Now here you can see the format of an account. You can see date, description, ledger folio, and value. Again, you can see the same columns. Now you can see that the same format has been divided into two sections as debit side and credit side. In an account, left side is the debit side and the right side is the credit side. Here we firstly write the name of the account. In the date column, we write the date that the transaction occurred. In the description column, the name of the account that is used to record the other entry of the double entry. The ledger folio column is used to write the page number of the account that is used to record the other entry of the transaction. Next, the value of the transaction. The same repeats for the next columns. Instead of the previously discussed structure, we can use a T account to record transactions. There are 5 types of accounts: asset accounts, liability accounts, equity accounts, income accounts, and expense accounts. What are the examples of asset account? Land and buildings, cash account, and bank account. Creditors accounts and bank loan accounts are examples of liability accounts. What are the equity accounts? Capital accounts and drawings accounts. Then what are the income accounts? Sales accounts, interest income accounts, expenses accounts, electricity expense accounts, and salary accounts. Now, this is the basic rule that you should know when you are recording transactions in ledger accounts. When you write the transaction in accounts, if assets and expenses are increasing, we write it on the debit side. If assets and expenses are decreasing, we write it on the credit side. When the equity, income, and liabilities are increasing, we write it on the credit side. When the equity, income, and liabilities are decreasing, we write it on the debit side. It's kind of messy, isn't it? Don't worry, then we are going to discuss some examples and then you will understand this easily. Here, look at the examples. Purchase a machine on 1st of January 2025 at 500,000 rupees. Now let's record this transaction in the ledger accounts. By looking at this transaction, we can identify that this consisted of two items, machine and cash. Machine asset, cash asset. To purchase a machine, we need cash. Now here we identified one accounting element. It is an asset. Because of this transaction, one asset increases, other asset decreases. Here, machine increases, cash decreases. Now here, we need a cash account and a machinery account. Now let's write the transaction in these accounts. Because of the transaction, machinery increases, machinery is an asset. Now remember the previous rule that we discussed. When assets increase, we write it on the debit side. Machinery account debit, we write it like this. Because of this purchase, our cash decreases. Cash is also an asset. When an asset decreases, we write it on the credit side. So, cash account credit. Obtain a bank loan of 200,000 rupees on 1st of January 2025. Now here, in this transaction, there are two items, bank loan, liability, and cash asset. So we need two accounts, a bank loan account and a cash account. A bank loan is a liability. When liability increases, we write it on the credit side. So the bank loan account should be credited. Then the other account should be debited, which means cash is debited. The logic is that cash is an asset. When we receive a bank loan, cash increases. When asset increases, we write it on the debit side. Receive an interest income of 20,000 on 5th of January 2025. When we receive cash, cash increases. It means asset increases. So cash debit. Interest income also increases. When income increases, it should be debited. Always remember this, then double entry is very easy. The ledger. The ledger means a collection of all accounts is called the ledger.